Homes have generally appreciated for quite a while. We own about $40 million of real estate, and then we have a little over 200 million under operations.
Meet John Entwistle, the founder and CEO of Wonder, a $100 million startup owning and operating the most mind-blowing properties in the US.
My biggest piece of advice if you're getting into investing in real estate is
Hey guys, welcome to Silicon Valley Girl, and today we have a very special guest. I have John, who owns a company valued over $100 million, and it's a company in real estate and short-term rentals. Thank you, John, so much for being here.
Thank you so much for having me.
I have so many questions. I'm just getting into real estate, and I wanted to ask you a bunch of questions around picking out the property and managing it. So my first question would be, when you look at the market, how do you decide what you're going to buy? What are your resources? What are the calculations?
Absolutely. So the first thing you want to look at is just all the different data providers that are out there. So you have services like AirDNA, Key Data, how the regions that you're looking at buying a home in will perform from a revenue perspective. The one thing I'll note though is that you want to kind of take those revenue projections with a little bit of a grain of salt, right? You want to sort of be really thoughtful in your underwrite and be rather conservative in it. And ideally, if you can, once you find a region that you're really excited about and you want to purchase a home there and you're thinking about short-term renting it, call the local property managers and say, hey, how are other homes in the area performing? What can I expect this one to do?
Would they be open to sharing that?
For the most part, typically they'll want to have you as a customer, right? So that'll kind of be the flip side of it. Mm-hmm. But again, what I would say there is you really want to get multiple sources. If you can find and talk to other owners of vacation rentals in the area, they'll typically be pretty open for the most part. Mm-hmm. It requires a decent amount of digging, but the more accurate you can get, the better. And then again, I would say is you can't, I wouldn't necessarily plan on the revenues, if that makes sense. So you really want to make sure that you're buying the home at a really good price, that you feel good about the market, that you're ready to hold it for a long time.
Long time meaning?
There's so many different ways to look at that question. I would say probably 10 years plus is really in your ideal world, but a lot of it also depends on the appreciation that the market may see. Yeah. You may also have the opposite of that, right? You could have, home price depreciation, which is, I think, something that people haven't really thought about. Homes have generally appreciated for quite a while, but as everyone knows, it's possible for home prices to obviously go down as well. And so you just want to make sure that when you buy a piece of real estate, that you give yourself a little bit of cushion, that you really focus on that cost basis. If you can increase the value when you buy a place, that's always a good move as well. Let's say, a place needs a little bit of work or whatever that looks like. But the biggest thing when buying real estate is you just never want to overextend yourself. You want to make sure that it's an asset that you can very clearly afford, that if the cash flows from renting the property aren't as good as you want, that you're still in a good place, and that you're prepared to own the asset for a long time. Because if you think about it, when you're forced to sell real estate, it can be relatively difficult to make money. And so you have to be in a position where, you're willing to say no, you're willing to hold on to the asset, those different pieces.
And how accurate, when you do the research and then you actually buy the property, because how long have you been doing this for?
Yeah, in terms of Wander, it's only been around for about 2.5 years. We own about $40 million of real estate, and then we have a little over 200 million under operations.
The ones that somebody else owns, but you
exactly.
rent them out for them. And so how accurate has the data been? So you have real numbers now?
Yeah, absolutely.
Prediction versus reality?
Yeah, that's a great question. Candidly, it's been relatively accurate. And I think that's been because we've been very paranoid about a lot of our early acquisitions. Though some of it can be pretty dislocated. For example,
which areas are the most dislocated?
Well, it really depends actually on an asset level. So Wander as a platform, we generally outperform the market in terms of occupancy and ADR and generally revenue.
What's the average occupancy rate, by the way?
We average 80% occupancy across
80%,
the portfolio.
That's perfect.
So we generally outperform the market, but when we do our underwrites, we underwrite based on what would this home do as an average if it was just listed across the various booking platforms like Airbnb and VRBO. We don't attach a Wander premium to it, and we just do that to give ourselves a little bit of cushion. When we see that Wander is performing the same as that original underwrite, we didn't outperform our underwrite, then it's okay, that, even though that's in the margin of safety for us, we would have wanted it to do a little bit better. Mm-hmm. So again, I think like the data isn't perfect. You want to be like really thoughtful with it. And then if you're going to do, what I would effectively do is multiple versions of your underwrite. So like, here's our base case, here's our, really downside case, and then here's our upside case. And you really want to be purchasing based on that downside case as opposed to the upside case.
Yeah. But your properties have been profitable since day one, so month one?
Yeah, no. So, I mean, obviously there's a stabilization period, like about call it 3 months, give or take. But yeah, all of Wander's properties were profitable in the first year.
That's great. So the revenue covers mortgage payments, insurance payments, renovation. Do you buy new furniture? Or?
Yeah, so that falls into this idea of like CapEx. So that goes into like the total cost. But yeah.
Wow. So, by the way, I had a question because I know Four Seasons, when they start planning a hotel, they start with planning how much mattresses are going to cost because they're so expensive. I know your mattresses are like is it purple?
Bright.
Bright?
Yeah.
Okay. So what is like the most expensive piece of like furniture or like renovation that goes into a new home?
Yeah, so we have partners with most of our brands, so like they give us very, very steep discounts off of MSRP to like furnish our homes. That's one of the things. So when you're purchasing an asset, and again, it all depends on how you're looking at the home, right? If you're looking at it from a yield perspective, if you're looking at it from a like cash flow perspective, if you're buying it in terms of trying to speculate if there's going to be a home price appreciation, these are all like different variables. But when you buy a home, if there's any work that needs to be done, right, call it furniture, upgrades, those different things, you basically, if you're measuring your yield, would be adding that to like your total cost of the home. So if you purchase a place for $1 million and you spend $100,000 getting it all, set up, then you're basically doing all your calculations as if you paid, $1.1 million for the house.
10% on average, right?
Yeah, it depends.
Got it. Are there any properties that you think you want to get rid of?
We sell properties all the time, candidly. Typically when we sell them with an operated agreement, so they don't actually leave the platform. So whoever buys them will basically say like, I want this to stay as a Wander, and then we'll like operate it, and then they're the actual like underlying homeowner. So we sell properties like all the time, much like any other type of like real estate fund or investor. Typically in terms of like whether or not we decide to sell a property, it boils down to the yield. It boils down if we saw any appreciation. It may boil down to like if we see any like potential market risks. There are like all types of reasons why like we'll sell a property.
What are the risky markets?
Gosh, I mean that's a tough one, especially in the current macro environment. There are so many markets that have gone like up and down. Call it 10-20% over the last like
California,
2-3
right?
years.
They're introducing a new tax.
Yeah, California is like all over the place. I mean, you have like local areas like the Phoenix area, Austin, etc. Candidly, predicting the current real estate market is like really difficult. I mean, it's kind of like anyone who says they can predict the stock market is normally like full of it. Anyone who can predict the real estate market's also kind of full of it. But so much of real estate is tied to interest rates, which makes sense, right? Like when interest rates are low, your cost of capital is super low. And so asset prices, go up because it's easier to afford the monthly payments, versus, when interest rates rise like they have over the last 2 years, typically you'll see some type of, home price depreciation, right? I think what's been really interesting, and like this has kind of puzzled economists over the last, call it year or two, is that interest rates have risen really dramatically, yet home prices have stayed relatively firm.
Oh yeah, and they're still kind of,
and they're still going up, which also doesn't necessarily make sense to me. Like I don't pretend to be a macro economist, like in any way, shape, or form, and so like I won't speculate. There's a lot of like really great real estate folks who will. Like you can listen to stuff from like Starwood and otherwise, but yeah, I mean I think. I don't know when the right time to like buy a home is. I'm not sure like which markets are going to go up or go. I can say again is like just like the core principles of any type of investing, which is like be very confident in the underlying asset price, be ready to hold on to it for a decent length of time, and make sure that you don't overextend yourself, and make sure that the leverage that you have on the property is something that is like that you can very easily maintain. Because if your debt service is too much and the property ends up depreciating and you really kind of took a big bet on certain cash flows that would happen from it, you can end up being in a position where you're forced to sell, and that can be difficult. Maybe
there are like areas, again, for a beginner real estate investor, because for me the most like difficult task was to pick up the area, because everyone's like, oh, we invest in Florida, it's doing so well, but then you find people who like stay away from Florida. Same with Hawaii, same with California. Maybe based on your 2.5 years of experience of running, you know, those short-term rentals, which area gave you most problems? Like, there are more regulations, something's always coming up, or like, I don't know.
Yeah, I mean, candidly, a lot of it is also like micro areas within like broader areas. So it's like within, like, let's say California, right? You have however many counties and then however many local areas. And then you have fire zones, which carry certain insurance requirements and issues, certain taxes. So you really like want to be thoughtful about each one of those pieces. And again, like, I think one of the best ways to go about buying real estate in one of these local areas is to find someone who currently owns real estate in that area and ask them as many questions as you can. And if they're willing to share, you know, their books or whatever else, that can be really great. You know, at the end of the day, like, the advantages to investing in real estate are, a lot of them are tax-based advantages. There's a lot of advantages if, you know, you hold for a certain period. A lot of advantages if you can obviously like buy at the right price. And so you just want to be like thoughtful about those pieces. Where most people get into trouble is when they like make certain revenue assumptions and like they end up missing on those revenue assumptions, and then the rest of their calculations kind of fall out of whack. So yeah, I would say like my biggest piece of advice if you're getting into investing in real estate is ask as many questions as possible to people who own real estate in those areas, and also like to people who have as much experience, you know, investing in those areas as possible. Because, you know, anytime you're buying something like real estate, it's a relatively like illiquid asset. And so it's not as easy to sell. There's a lot of hidden costs, those different pieces.
Okay, my final question. Should you invest in 2024, or is everything going to crash? Like, you know, on YouTube every day there's another video, you know, the real estate market is about to crash, because everyone is expecting another crash as always.
Yeah, I feel like unfortunately, like, I can't give you a real answer there, because I can't see the future, and nor do I pretend to be an economist in any way, shape, or form. You know, again, like there are a few like known facts about trying to time the market, and it's basically that like you can't really time the market. But what you want to be sure of, and this is like true whether you're investing in the stock market or real estate or anything else, is that you never want to be in a position where you're forced to sell. And so like that's, I think, the thing that catches a lot of people off guard. And so if you are going to be investing in what is a like relatively unpredictable macro, just make sure that you're doing so in a conservative enough way that you have like your cash reserves, that you have everything kind of put to the side, so that if there's that black swan event, or if things crash, or you need to cover certain unknown expenses, that you're able to without being forced to sell. Because last thing you want to be doing is selling into a down market that can be, you know, really, really tough.
I'm wishing you all the success, because I think what you're doing is amazing. I've enjoyed staying at your Big Sur property a lot. It was a blast for all of us. Kids enjoyed it. I loved it. Thank you so much, and hopefully see you around, and hopefully someday we'll invest in your fund when you're back at it.
Thank you so much. It really means the world. It's been wonderful.
Thank you so much.